Take a look at this data sheet for the Poojaa Precision IPO. Right now, the gray market premium, the unofficial trading price before the stock actually hits the exchange, is pointing to an expected listing gain of 81 to 86% on day one. The offering documentation defines the financial parameters of the deal. With the price band set at up to 301 rupees per share, the total issue target sits at nearly 160 crore. We see a lot of small to medium enterprise IPOs hit the market with massive hype, only to fizzle out shortly after listing. So we have to ask, are these numbers grounded in reality, or is this just a temporary market bubble? The first piece of evidence justifying the frenzy is found in their historical financials, shown here. They are currently generating nearly 300 crore in annual revenue. To understand why investors are pricing this IPO at such a high premium today, we cannot look at future projections. We have to reverse engineer their 30-40-year operational history to see if the physical foundation actually supports this valuation. This company overview tracks their origins back to August 1992. Over 3 decades, they evolved beyond simple casting, building fully integrated manufacturing capabilities under one roof. That evolution resulted in serious scale, now managing production of over 600 unique safety-critical components. This physical output consists of high-precision aluminum components, like this engine block, requiring specialized casting to maintain strict performance tolerances. Pumping out that level of precision at scale requires massive infrastructure. They currently operate 2 advanced facilities in Pune, with a melting capacity of 13,800 metric tons every single year. This 34-year timeline of physical expansion and manufacturing complexity provides the operational baseline for their current 300 crore revenue. This map details where that massive output is going. They supply 58 clients globally, exporting heavily. But breaking down the source of those sales reveals a clear dependency. Over 72% of their historical business is anchored entirely in the automotive sector. As a Tier 1 supplier, their parts support the caliber of commercial and luxury vehicles rolling out of major facilities like this one. This reliance creates a vulnerability known as customer concentration risk. More than 70% of the company's total revenue is precariously balanced on the purchase orders of just 5 top clients. Add to that the constant threat of raw material sensitivity. Because they work primarily with aluminum, their profit margins are at the mercy of volatile global commodity prices. Their historical sales engine is powerful, but it is deeply reliant on a handful of key automotive players and stable material prices, risks that investors have to consider when evaluating the current IPO premium. This chart reveals how the company plans to use the capital. The core objective is raising over 106 crore for capital expenditure. That money is earmarked to build a brand new manufacturing facility in Pune, signaling physical expansion beyond current limits. This new facility represents a deliberate strategic pivot. They are actively diversifying away from their historical reliance on automotive by pushing into high-margin sectors like aerospace, defense, and electric vehicles. This breakdown shows 2 market strategies. The short-term play focuses entirely on massive gray market demand for immediate profits on listing day. The long-term outlook requires holding the stock, believing their track record will translate into managing a new plant and entering the defense sector. The Poojaa Precision IPO is the culmination of decades of industrial development. Investors must weigh a proven operational past against the concentrated risks of a highly ambitious future.